Hello, everybody. You know who it is? We're back with something we haven't done in quite a while. We're going to talk about some news today. Just what's going on in the news today. Markets are up pretty nicely, so I think it's a good day to cover some news, see what's going on. Overall, a lot of this success can really be attributed to yesterday's downward day. Now we're seeing a positive day as a result. So yesterday we were down because the Fed cut interest rates. Investors sold out because of it. And again, the Fed's claiming this is an emergency rate cut to an extent to where they want to prevent any negativity from potential future economic issues. That's the point of this rate cut, and I think investors kind of bought back into that, and we're back to buying. So let's go ahead and take a look at what we got here going on. So obviously one question I think we've all had here is going to be, how the heck are retailers doing in obviously the environment of no retail, right? Am I right, guys? Retail doesn't exist anymore, says Amazon. This is fake news. I hate to tell you that right now. So I will say, though, Dollar Tree beats on an EPS standpoint, a non-GAAP EPS standpoint, by 4 cents. They put up a GAAP EPS of 52 cents, though. From a revenue perspective, they missed by $70 million, but increased 1.8 year over year. This is a relatively shocking number to me. I mean, I understand the business very well, but this is a dollar store, right? I know I say dollar store, and then really there's items upwards of $10. I mean, it's not everything there is a dollar. Let's just be fair. There's a lot of items that are, but regardless, with such low selling costs, I think that's pretty crazy to see $6 billion in a quarter. That just shocks me. That's a weird number for me to actually perceive in my perspective. Especially, I mean, do that many people go into dollar stores? I've been in once or twice. It's not for me. I mean, I get the value of it occasionally to get some cheap decorations, stuff like that. I understand, but $6 billion worth of merchandise sold? Holy crap. That seems absurd to me in a 3-month period. Really? And this is over the Christmas period too. So you're telling me for Christmas you got someone from the Dollar Tree? I'm going to be returning that gift right away, but I'm not even going to step foot in Dollar Tree. I'm not even going to return it. I'm just going to set it on fire. Because you're going to give me a Dollar Tree item for my Christmas. Santa, how dare you, Santa? Santa disrespectful. But then we look at Abercrombie Fitch. How in the world are clothing companies doing? Ho, freak yeah. Beats on a non-GAAP standpoint by 8 cents and beats on a GAAP standpoint by 5 cents. $1.29. Abercrombie and Fitch, I will say, and obviously all everything attributed to Saint Tropez by Post Malone. So I couldn't think of the most influential artist of all time right now. Abs like Abercrombie Fitch. That's this guy. He did this. I'm just saying. No, for real though, Abercrombie and Fitch, I didn't realize how profitable they were, but that is a good EPS number. I like that. And the very small difference between non-GAAP and GAAP EPS, I really like that one. And I do, because when companies fudge their numbers to look like what they want them to, it frustrates the heck out of me. From a revenue perspective, they did $1.18 billion and raised sales 1.7% year over year, which beat by $10 million. So obviously pretty well just flat. You might as well call it flat. Then again, $10 million, I could have, several generations of my family retire just off me having $10 million. But in a business perspective, big business, that's flat, okay? There's not much change there. Still, those are good numbers. So obviously the concern is, retail is dying, right? Just kidding. It's not. One thing I will say, and I've mentioned this before, clothing retailers aren't going to die. Let's be fair. If there's one thing that people really don't want to buy online, first off, there's several things. But one is definitely going to be clothing. Clothing does not fit right when you buy it online. Let's just be fair. A small from one brand and one company online is not going to be the same as a small from another one. It's just a lot easier than having to deal with a return process if you buy the physical merchandise in store. It's just easier that way. But still, clothing stores, they're going to be around. So don't worry for Abercrombie and Fitch. I'm excited. I went a little out of order, so let's start from the morning here. So we have earlier this morning that Ford will produce an all-electric version of the popular transit cargo van in the U.S. as early as next year, under previously announced plans to spend $11.5 billion on vehicle electrification through 2022. So obviously they have the number one selling cargo van, transit cargo van specifically in the country. So it's going to be interesting to see what this electric cargo van has to offer. I think there's a lot of benefits that come with this for many reasons. Obviously, these transit cargo vans aren't owned by just normal consumers for the most part. These are businesses. And what are companies doing right now in order to try to seem hip and happening? Well, it's all about a Go Green initiative. Am I wrong? So companies will be falling in line with bigger corporations that are trying to go green, and they're going to start using these electric vehicles for transit. I think that's 100% the case. So I'm excited to see what that means for Ford, what the demand looks like on this cargo van. Obviously, it was a matter of time. There's no doubt about it. But I'm excited to see what exactly they have to offer for me. But what else do we have? We have, that's right, El Pollo Loco says it'll be the first national chicken brand. I don't have one near me, so you're not national, you liar. In the country to deliver plant-based chicken systems system-wide with an introduction of chickenless Pollo Taco. Okay, can you hear me out? You guys know what an oxymoron is, right? That is the world's biggest oxymoron of all time. Chicken Pollo Taco? Excuse me? That's chickenless chicken taco. How dare you? You dirty liar. That's disrespectful to me. That's all I can tell you. I find it quite rude that they would say chickenless chicken taco. It's not the same. You can't lie to me like that. But obviously, they're going worldwide with their... something seems weird. It's weird. But El Pollo Loco says it bypassed the popular suppliers in the space to create its own plant-based protein for the menu item. Let's be completely fair, and I mentioned this when I talked about Beyond Meat stock. So, Beyond Meat is a company that I understand the hype around it right now, and a lot of companies are signing deals. But if a company like El Pollo Loco is going to create its own option, I don't see why bigger chains like a Burger King, Wendy's, McDonald's, why aren't they, and I guarantee they are, trying to create their own plant-based protein? I don't think there's any denying that. So I think Beyond Meat, it's important to have the company as is. I think there will come a time, though, where they get a majority of their business from selling merchandise in retailers. I don't think they're going to get a lot of their money from contracts from big corporations anymore, because these big companies, these big fast food providers, I mean, I don't know if they're providers anyways, but these fast food companies, I guarantee you they're testing and working on creating their own because it's a lot more cost effective for them. No doubt about it. But we'll see how that turns out. But nothing sounds grosser than fake chicken to me. I think that something that sounds weird. I get the beef still seems weird, but the chicken just seems like it'd be hard to fake chicken. But who knows? Maybe they did. And a shareholder update: AT&T CEO John Stankey, his name Stankey, P.U. Reiterated company guidance for the coming year and laid out more accelerated share buybacks. That's freaking right. So the wireless service revenues grew by more than 2% in 2020. Good for them. Will continue to be the company's biggest, mobility will be the biggest company driver of revenue growth and profitability. He says that based on expectations of 5G growth and opportunities with the upcoming HBO Max streaming service, lovely for them. 5G obviously is a big thing for these mobile companies. I mean, this is what's going to get people buying phones and setting up their contracts. More than usual, people might have been sitting on the sidelines waiting for 5G. Well, now is their time to come back in and get a phone. So that's interesting. Stanky says, and nationwide 5G coverage is planned by the end of Q2. again, obviously, we talk all about this 5G coverage. So there isn't necessarily a true 5G that they're actually operating with right now, to be frankly honest. And no phones currently right now are even operable for 5G. So this is really just a plan to set up the network for when these 5G infused, when these 5G smartphones come out. So that way people can actually utilize the network right off the bat instead of buying a 5G or a 5G phone. If they can't have a 5G network, what's the point? So these companies are trying to obviously corner the market here and just max out what they have in terms of that. We also have, guess what? We have an ad, and we have GM as Morgan Stanley's top pick in auto. We expect GM to show investors a number of performance speculations. Its battery pack versus key competitors. Adam Jonas, the Jonas brothers are back. I'm interested, but he sees that GM is expected to grow electric vehicle sales by over 30 times by 2030. What is going on? I'm sorry here. And again, I do agree with him as far as the Tesla will be matched at some point once other electric vehicles get in the game. I do think their revenue will not nearly grow as fast as it has been, but 30 times EV sales growth, obviously it's easier because they don't sell that many electric vehicles, but regardless, I just don't see where they're getting these numbers and why GM's the number one for them. GM is seen having a chance to show serious leadership in decarbonizing its auto fleet with a positive impact on earnings and multiple. GM stays as the firm's top pick in auto. That's an interesting one. I mean, GM, good for GM shareholders. I mean, good for them. Morgan Stanley high on you. But you see here, get this guy off the left side of my screen. General Motors told investors that the company plans to invest $20 billion by 2025 in electric and automated vehicle technology. GM thinks it can be profitable after its electric vehicle transition by slashing the number of powertrain combinations in use, as well as simplifying batteries and vehicle architectures. That doesn't seem good to me. Can be profitable, not. I don't like it. I'm not a huge fan of GM right now. I don't think they're. I mean, a lot of auto companies I'm not a huge fan of right now, just due to the fact that really we're in a bad time for auto. Once electric vehicles roll out, we will be in a better time for these type of companies. Right now, auto is just kind of in a decline, but once we go more widespread with electric vehicles, I do think more people will get in the market and start buying vehicles for sure. Pretty exciting. So CEO Mary Barra stated that the automaker is on track to cut battery cell costs to less than $100 per kilowatt hour in a profit-boosting development. So cool for them. Goal of selling 1 million electric vehicles in the U.S. And China by 2025. It's a lot of vehicles. That's a lot of vehicles. You have Starbucks playing, that's right, defense. Starbucks is telling employees to regularly sanitize door handles, chairs, tables, and coffee bars amid the virus outbreak. That's right. Corona's with the boys, baby. Store managers have been given the green light to boost employee hours by 1% to account for the extra cleaning. Are you kidding me? So pretty much you're going to expect maybe not hitting on in terms of what they're expected in terms of EPS for the next quarter because, expenses are going to be a little bit higher because they're spending money on having people clean. So reopen around 85% of these stores in China, though. Interesting. So obviously their annual meetings on an online format now too, which is pretty exciting. We have Campbell's Soup seeing higher demand, no doubt about it. People are freaking out right now about this coronavirus. And I know too because I work in a retail environment, and guess what? People are freaking out and stockpiling on everything. So Campbell's Soup sees a little bit more of a demand because of that. They also reported earnings in which they had a non-GAAP EPS beat by 6 cents and a GAAP EPS miss by 4 cents. And revenue was in line, down 0.5% year over year. So cool for them. We've got Uber here updating and confirming that they still plan to be profitable by the quarter four of this year. I mean, I don't know how that's going to do for them, but we'll entirely see. But you see Lyft maintain its quarter one outlook as well. Ride-hail business remained extremely strong, so good for them. Good for these ride-sharing companies. We have Apple here. Love this news article. Get this guy out of here. Nomura analyst Jeffrey Caval cites recent Foxconn comments that it expects to return to normal operations by the end of the month, which Caval sees slightly better than hoped, and thus a positive for Apple. So supply chain recovering faster than expected, but regardless, supply chain shouldn't have been impacted that much. Nomura gives a neutral rating at a $295 price target. Sorry, Nomura, you are an idiot. The SEC is giving more companies more time to disclose their earnings, 45 days after the quarter end. Good for them. AMD scoring a win, as well as Hewlett Packard Enterprise. Combined together, they win a $6 million deal to develop a supercomputer to the U.S. Department of Energy's nuclear security arm. The El Capitan, sorry, I said it like it should be, but say it however I want. Now, a supercomputer will be housed in Lawrence Livermore National Laboratory in Livermore, California. Livermore, I don't like Livermore. 9 of the 10 fastest supercomputers in the world use chips from either Intel or IBM, so interesting that AMD wins this. It's very good win for AMD. So let's skip this one. We don't like talking about the Coronas, okay? We don't like talking about that. Odeon Capital confident on Nordstrom here. Best positioned department store sector in the department store sector due to the ongoing investments being made to transform the company and management demonstrated foresight. We believe that Nordstrom's department store identity overshadows the breadth of business, digital, off-price, subscription, curation, etc. that will eventually support the valuation well above current levels and our discounted target of $45 for them. Cool for them. And we're going to finish it up by saying, that's right, Eldorado Gold. We all know the road to Eldorado. Everyone's favorite animated film of all time was upgraded based on the five-year outlook. Gets a price target of $13 versus the share price of $9.64. So that's based off 5-year outlook, but that's all I got for you in terms of earnings. Let's go. Or news.